Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds and the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite significant level of previous monthly resistance, which was acting as resistance all across the zone, which the market then broke to the upside with this impulse. And at that point, all this previous resistance was turned support at this level. So as the market is testing this previous resistance turned support and rejecting it to the upside, we could expect more bullish continuation to be created away from this level. So from a monthly standpoint, everything seems quite bullish. Now, if we drop down on the weekly time frame, what do we have? Well, from a weekly standpoint, what we can notice is that, first of all, we can identify the pattern that the market has been creating so far. In fact, we can notice a very clear impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market has just retraced exactly to the zone that is in between the 0.618 and 0.786 of the Fibonacci taken on this weekly impulse leg, which creates confluence of support inside of this zone. So at the moment, the market is actually testing confluence of support, rejecting it to the upside. And from here, we could expect more bullish continuation to be created away from this area. So the weekly time frame as well seems quite bullish. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, first of all, I did speak about gold quite a few times in the past. I spoke about it when the market was around this area and explained all the reasons for which we could expect this rejection to the upside. Then again, after this impulse and correction, I explained all the reasons for which we could expect the creation of a new daily higher high. And again, that is exactly what the market gave us. And after the creation of this M pattern, I explained all the reasons for which we could expect a push higher. And after this impulse and correction, well, we could expect the creation of yet another continuation to the upside. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. I also spoke about it after this M pattern, explained all the reasons for which we could expect the completion at the neckline. And again, that is exactly what the market did. You find all of these previous analysis in description for more free education. But at the moment, the market has created new structure. So it's definitely time for an update, which is exactly what we will be doing now. But before we dive into the technicals here from a daily perspective for gold, let's first go and see what is going on when it comes to the commitment of traders. So let's go and check what hedge funds and the big players in the market are doing. So the institutional side of the market is doing here for gold and how they're moving their orders. Now, what we can see is that with the last reports, we went from having 71.4k net positions with a situation where we had still more longs than shorts, but not that much more longs than shorts, to now having all the way up to 188.2k net positions. So we went from 71.4k to 188.2k net positions. So essentially more than double the net positions. Currently, we have 273,500 longs compared to only 85,300 shorts. So clearly, institutions have been moving aggressively to the bullish side for gold. In fact, we can see how longs from an institutional perspective were increased from 220.3K all the way up to 273.5K, and shorts got decreased from an institutional perspective from 148.8K to 85.3K. So clearly, institutions are moving to the bullish side for gold, making it stronger. So keeping in mind that institutions are long in gold, therefore making it stronger, let's go and see what we have when it comes to the technical aspect of this market. Now, what we have to identify here is that the pattern that the structure has been creating here from a structure perspective has just shifted. In fact, from here, the market was creating lower lows and lower highs. Now we have the creation of this inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. Now, in a situation like this actually means that the high that we have at this area is the neckline of the inverted head and shoulders, and is also, in other words, the previous resistance that needs to be broken to the upside in order for the market to continue higher. Because this is a level of previous daily resistance, which has been acting as resistance all across this area, that until the market will remain below it, this market can easily reject to the downside. So until we will remain from a daily closing perspective below this level, this market can easily continue lower. However, if we get a break above this resistance after the break on the retest of this previous resistance turn support, this is where we have very good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So to recap, until the market will remain below this resistance, it can easily continue lower. However, if we get the break on the retest, how I could be approaching a potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses, with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns, the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. The link is both in description and in my bio. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.